So thank you for joining us here today. We're going to delve into a topic that's on everyone's mind at the moment, which is the market volatility that we're seeing. I'm joined by Mike O'Sullivan, the Chief Investment Officer for Unio, and my name is Alex Kinsella. I'm Head of Investment Solutions here at Unio. So Mike, kicking off this brief conversation, we're going to touch on three key topics. First of all, what are, from a macro perspective, what are the reasons behind this bout of volatility and market turbulence that we're seeing. After that, we're going to look at some of the actual the impact of that from a market perspective, and then following that, we're going to briefly touch on our client portfolios and some of the positioning within those. So going back to the first aspect, from your perspective, what do you feel are the key reasons for the volatility that we've seen, particularly over the last few weeks in March?
So, Alex, we've seen volatility not just actually in equities, but in bonds and also in FX. Big move for the euro on the month. And there are three new macro developments. I think many people had expected Trump to start his presidency focusing on China. In effect, he started by focusing on his friends and allies. And I think people are worried about maybe three things specifically. One, the effect of tariffs on long-term trade and trade relationships, and also how that translates into things like inflation. The second is the effect of cutbacks in the government sector in the US and the attendant economic effects. And then the third one, which is probably more positive and more exciting, is this the dramatic change in policy in countries like Germany. We've just had the German election, and Europe preparing now to really beef up its defence spending. My worry would be that on the first two factors, we actually see investors and companies in general just put spending plans on halt until they get more clarity from fiscal and trade policy in the US. And I think that's probably the biggest concern. I'm less concerned about the effects on the government sector, but I think the uncertainty over trade is really the big factor acting on markets.
Yeah, it certainly impacted us from a market performance. This month I think the S&P is down almost 10%. It's down almost 9.5% year to date after having initially a pretty good start to the year. And then if we compare that to European equity markets, they're still up year to date around about 6%, albeit the last week or two things have obviously been a little bit tricky. But it certainly appears to be a major shift in investor behavior away from the US and towards Europe, with obviously that fiscal spend having a significant impact. Are there any other aspects to the market performance that you?
Let's translate the macro factors onto markets. And in many respects, the US market was starting from exactly the wrong place. We've noted many times in our Global Macro Council document and in our own investment committee, US stock market valuations near record highs, the level of concentration of big tech companies in the US index at absolutely historic levels going back to the 1930s. So the US market, if anything, was primed for a correction, and that hasn't been a surprise. And also, I think, to put things in perspective, this has also been about a revisiting of the European outlook by many investors. I think sentiment had just become too pessimistic, and given the dramatic policy action, people are now putting money to work in Europe.
Yeah, it's very interesting, and that's obviously also had a huge impact to the bond market, particularly in Europe, as we see with those fiscal spends. We've seen bond yields hit in Germany and across Europe hit levels we haven't seen since the financial crisis. So it's certainly creating a very volatile period. But I might bring us quickly to our portfolios then, and how have we navigated this environment, and I suppose almost from a preemptive position as well, because I know as we approached the end of last year, we had already started to rotate some of our portfolio. So you might elaborate on that a little.
Yeah, so importantly, just for holders of Unio portfolios, we've done two things in the last 3 months, which I'm glad to say anticipated this sell-off. So at the very end of the year, we started to move money out of US equities into European equities. Again, our sense was that sentiment was just far, far too polarized. Europe was comparatively very cheap compared to the US. And if you look at relative performance, we'd seen the deepest or steepest underperformance of Europe relative to the US. So we'd made that shift at the end of the year. And then in January's investment committee, I think a lot of sentiment indicators were quite stretched. Markets were pricing in the idea of American exceptionalism. The dollar was very strong. We had this valuation effect in US equities. So we took money off the table. We took money out principally of US equities and into cash. And that's earning a yield on cash now. And I think we have the luxury now of just sitting back and having the opportunity to reallocate that cash across asset classes at our next investment committee meeting.
And I think that's a good point, actually, that the positioning of these portfolios is taking account of the risks that are inherent at any point in time, but it also is remaining quite steadfast to the long-term strategic asset allocation of the portfolios. And I think as we conclude the call today, I think that would be the point I think we should leave it on, is that the client portfolios, and whenever we approach or going through periods of volatility in markets like that, it's important to remain somewhat steadfast with your strategic asset allocation. The managers and our team are positioning the portfolios to take account of these bouts of volatility, but generally staying committed to that long-term strategy will result, and historically has always resulted in, a more robust and better performance for investors. So certainly it can be turbulent times, and it's very, very interesting times at the moment, but not necessarily something for people to have knee-jerk reactions to.